How is everybody doing today? Welcome back to another episode of the Banker Next Door. I'm your host, Dr. Joe Berquist. Today, I'm continuing the crypto series with episode 16. If anybody has not had a chance to check out past episodes of the crypto series, I highly encourage you to go check them out. I've covered all kinds of aspects of the world of crypto, whether it be cryptocurrency, stable coins, crypto fraud, pig butchering, documentaries, you name it. I have probably covered it over the last year or so in the crypto series. But today, I'm bringing everybody on update on a number of stories. I've got some stories related to Coinbase. They had a legal investigation against them from the SEC dropped. They also made a very interesting accounting change that dramatically changed their balance sheet and really answered a long-standing question of who actually owns the crypto that's on their platform. Is it the individual or is it Coinbase? So we're going to take a look at that. Milei down in Argentina also had a meme stock down there that kind of blew up on him. And we've been seeing a lot of that lately, whether it's the Hawk Tua girl with that story with her meme coin. We've also had the Trump and the Melania meme coins. You know, I'm not sure why people keep investing in these meme coins, but like I said, we'll look at that story. Robinhood, very popular trading app right now. Their profits soared on the fact that they opened up crypto trading to a lot of their customers. So we're going to take a look at that. And then finally, we're going to take a look at an article from Bank Director that basically looks at stablecoins and basically says, you know, hey, stablecoins, are they friend or foe to the banks or to the banking system? So we'll look at that real quick at the end. So let's open up with this. First thing we're going to look at here. So this is the meme stock story with Argentine president's promotion of crypto rocks his presidency. An ally of Trump and darling of the global right, Javier Milei tries to deflect critics after a cryptocurrency he endorsed collapsed, wiping out $4 billion in value. So Argentine President Javier Milei has been on the defensive after a cryptocurrency he endorsed on X saw its value crash, triggering fraud allegations and calls for impeachment by his political foes. The scandal is hitting the libertarian leader ahead of his trip Thursday to Washington to meet with Trump administration officials to win support for his economic reforms, including approval for an International Monetary Fund loan. A darling of the global conservative movement, an ally of President Trump, Milei has described the fallout as a slap in the face against him and asserted he hadn't championed the cryptocurrency, but he has spent the last few days deflecting blame for the crypto fiasco and ordering an anti-corruption office run out of the Justice Ministry investigate. I did not promote it, he said to Argentina TV channels. What I did was I shared it. It's not the same. A federal judge, Maria Servini, was assigned to look into the scam and the president's role in promoting the coin after more than 110 Argentines filed complaints with the judiciary saying that they lost their investments. The crisis began Friday when Milei, who frequently fires off missives on X, posted about an investment opportunity involving a meme coin called $Libra, which he described as a private project working to encourage growth of small Argentine businesses and startups. The world wants to invest in Argentina, Milei said in a now deleted post. The coin saw its value surge before collapsing within hours, wiping away more than $4 billion in value. Investors believe they were duped into what's called a rug pull in the crypto world, speak for a scam in which a coin is promoted to draw buyers from the public before early investors dump their holdings for a hefty profit and prices tank. And again, this is exactly what we saw. This is exactly what happened with the Hawk Tua girl. This is exactly very similar to what happened with like the Melania meme stock that came out, which basically the Trump family and Trump administration distanced themselves from and said they didn't have anything to do with. The Trump meme stock saw a huge up spike, but then came back down, but then I believe is kind of stabilized a little bit. But anyway, I digress. I'm just trying to point out that there are similarities here in this scam between other things that we've seen. In the aftermath of the token's collapse, Hayden Davis, who asserted online in several media interviews that he had advised on the $Libra token project, said he engaged in sniping, a crypto parlance for using bots to scan blockchain transactions to conduct swift buying and selling of newly launched tokens for profits. Milei's office said Davis has no connection to the Argentine government. The practice has caused controversies because oftentimes insiders with prior knowledge of the token launches can snipe ahead of a token officially launches and dump them on ordinary investors who buy in later. So I think this is going to continue to move forward. I don't think that it doesn't sound like that this is something that is going to really hurt Malay. I think that I think they're just, people are sniping there in Argentina at anything they could do. I love Milei. I love everything he's doing. I mean, his economic reforms have just been absolutely incredible. I'm going to have to do a whole episode on what he has done down there in Argentina because it's nothing short of miraculous. They had 17% inflation, which has now been brought down to, I think, just 2 or 3%. He laid off a whole bunch of people in the federal government. Kind of sounds like something that somebody else is doing right now, right? He's been cutting regulation. He's been doing a ton of things that have worked really well. But I wanted to point this story out just because it's another story of meme stocks. I can't say enough. Stay away from meme stocks. Just stay away from them. There's too much nonsense going on in the crypto world with this whole meme stock nonsense. So anyway. All right, let's move on here to Robinhood. So Robinhood stock hits all-time high as soaring crypto trading powers the fourth quarter profit. So Robinhood markets reported fourth quarter profit that was more than double estimates on booming cryptocurrency trading. The trading platform's revenue more than doubled, and crypto trading revenue made up more than half of overall transaction-based revenue. Robinhood set records for earnings per share, revenue, adjusted EBITDA, assets under custody, net deposits, and Gold Card program subscribers. So for anybody that doesn't know, Robinhood has really been expanding recently. They obviously they've got all the normal trading features at this point, as far as buying, selling a stock, getting into options. I believe they offer futures trading now, margin trading. So they've kind of covered the gamut there, and now they're moving out to other things. Now they want to get into crypto. They want to get into other stuff. So I don't really care for Robinhood as the platform as a whole because I don't really like the owners. I don't really like the founders. There was a lot of stuff that went on during the whole GameStop, the stunk stocks, and GameStop stock in particular. When they basically cut off trading to people because, a bunch of the big hedge funds like Citadel weren't happy with what was going on. And so there's a lot of things about Robinhood I just distrust. I wouldn't tell people not to go there, but I certainly wouldn't endorse it either. But they're seeing a huge surge here now that they've gotten into offering crypto trading to their customers. And I just thought it was an interesting thing to point out. We'll have to keep an eye on this and see what happens. But, like I said, just wanted to bring that story just because, again, I thought it was another interesting wrinkle in the crypto world. So, okay. Let's take a look at Coinbase here for a few minutes. So Coinbase says the SEC has agreed to end a bogus enforcement case against the crypto exchange. So Coinbase co-founder and CEO Brian Armstrong said on CNBC's Squawk Box, said that the company will not pay any fine. In 2023, the SEC charged Coinbase with operating an unregistered securities exchange and for failing to properly register its crypto staking program. Trump embraced crypto during his presidential campaign, attending the 2024 Bitcoin conference and referencing financial donations from industry leaders. So Coinbase announced Friday that the Securities and Exchange Commission had agreed to drop its enforcement case against the company pending the approval of the regulator's commissioners. In 2023, the SEC charged Coinbase with operating an unregistered securities exchange and for failing to properly register its crypto staking program. However, the case was started under former SEC Chair Gary Gensler. The commission is expected to take a more friendly stance to the crypto industry under President Donald Trump and Paul Atkins, the current nominee for SEC Chair. Coinbase co-founder and CEO Brian Armstrong said Friday on CNBC Squawk Box that said that the company will not pay any fine. He said the agreement to end the case marks a huge day for Coinbase and the crypto industry at large. I think it's a really important signal that after a small group of activists in this prior administration who tried to unlawfully attack this industry, we're going to be able to turn the page on that and finally get some regulatory clarity in America, Armstrong said. I hope that they'll dismiss all the bogus cases, frankly, and it will be a domino effect for the rest of the industry, he said. An SEC spokesperson declined to comment on Coinbase's announcement Friday. Shares of Coinbase opened higher on Friday, but reversed course and closed down 8% amid a broader market sell-off. Okay, so here's my take on this. I think so. Here's my thoughts. This I think is good and bad. It's good because I think that this case went about perhaps attacking or going after Coinbase in the wrong fashion. I think it was a little misguided in the way that Gary Gensler tried to go after crypto. However, is that to say that these crypto exchanges do not need regulation? Absolutely not. Absolutely not. There absolutely needs to be more regulation around these crypto exchanges. They need more guardrails, so to speak. All of the major problems that we have seen in the crypto world have come from the exchanges, whether it was the exchanges doing things that they shouldn't have done, or the exchanges getting hacked, or, what have you, doing shady things, what have you, a la, FTX, Binance. You also got Kraken out there. You got a bunch of crypto exchanges out there. Coinbase, however, if I'm accurate, and again, comment down below if I'm not, I believe Coinbase is the only crypto exchange that is US based. I believe all the other exchanges are based outside of the US, and that has been part of the issue with regulation. Now, I will say Coinbase, I think for the most part, to be fair, I think that they have been very up and up compared to a lot of the other exchanges. They did not get into or act in a fashion with some of their products and things, doing some of the things that were done by, say, FTX and Binance. I think that they have run a more straightforward, cleaner, perhaps, type operation, and that has kept them out of a lot of the certain news or the sites of certain regulators and to a certain degree. But like I said, overall, like I said, I think this is a good thing. Do I think that we still need regulation on the exchanges? Absolutely. So we'll see how that plays out. Now, here's another interesting thing that happened to Coinbase. So this is an article from the Wall Street Journal, and this says a lingering question at Coinbase: who really owns the customer's crypto? Coinbase's accounting change significantly affects its numbers and highlights an old worry. An odd thing happened when Coinbase reported its quarterly financial results last week. The bulk of its assets and liabilities abruptly disappeared. The crypto exchange had shown $291 billion of assets as of September 30th. At year end, they were $23 billion. Total liabilities, once $282 billion a few months earlier, dropped to $12 billion. There wasn't any great change economically. Rather, the company started using a different accounting treatment for the digital tokens it holds on behalf of customers. Now they are off Coinbase's balance sheet. They used to be on. The shift highlights a lingering issue: who ultimately owns those digital assets? The off-balance sheet treatment suggests the customers do, rather than Coinbase. But Coinbase, in its latest disclosures to investors, still says the issue isn't clearly resolved. If Coinbase went bankrupt, the Bitcoins and other tokens held on behalf of customers could be considered the property of the bankruptcy estate, and such customers could be treated as unsecured creditors. Coinbase, in its annual report, said that it doesn't believe that would happen, and that it was structured, or it has structured, its customer agreements with an eye toward preventing such an outcome. But it also cautioned that due to the novelty of crypto assets, courts have not yet considered this type of treatment for custodied crypto assets. And then there's a very interesting chart here. It says Coinbase accounting change caused its balance sheet to shrink significantly. So the chart here basically shows the assets for 2023 and 2024. We could see that at the end of 23, the company had total assets of $206 billion, and then shot up in the first quarter of 24 to $348 billion. Decreased to $390 billion in the third quarter, but then dramatically fell to only $22 billion in the fourth quarter because of this accounting change. The company's old balance sheet treatment adhered to an interpretation of the accounting rules that the Securities and Exchange Commission published in 2022. In that document, called Staff Accounting Bulletin Number 121, the agency staff cited risks and uncertainties unique to crypto assets that don't exist when custodians safeguard traditional financial assets such as stocks and bonds. Consider, for instance, a large custody bank such as Northern Trust. It has $156 billion of total assets on its balance sheet, but it also has many trillions of dollars of assets under custody. Those aren't on its balance sheet because the assets, without question, belong to clients, not to Northern Trust. With crypto assets, the delineation isn't necessarily so clear. The SEC's 2022 accounting bulletin cited a dearth of legal precedent for how the customers of cryptocurrency platforms would be treated in bankruptcy. Providing custodial services for crypto assets involves maintaining the cryptographic keys needed to access them. In that respect, crypto assets have similarities to bearer shares, where whoever possesses them essentially owns them. After some crypto trading platforms failed in 22 and 23, obviously like FTX, bankruptcy judges indeed ruled that many of the customers were unsecured creditors and that the crypto assets being stored belonged to the company's bankruptcy estates. Among the crypto platforms where customers lost money and bankruptcy proceedings were BlockFi, Celsius Network, Genesis Global Capital, and Voyager Digital Holdings. Nevertheless, the SEC in January rescinded the prior accounting bulletin after its change in leadership following the presidential election. That gave Coinbase license to stop abiding by the prior bulletin and to shrink its balance sheet. SAB 121 had been a political hot potato from the start. Last year, both houses of Congress passed a joint resolution to rescind the bulletin, but then President Joe Biden vetoed it. The SEC resignation of SAB 121 drew applause from the crypto industry and its enthusiasts. The policy change, in their eyes, removed an obstacle blocking more widespread acceptance of Bitcoin and other cryptocurrencies. Okay, so again, very interesting change here. But which I think is good. I think ultimately at the end of the day, this is a very good change. But where we go from here remains to be seen. And like you said, I think the important thing is that there's still a dearth of legal precedents as to what happens when one of these crypto exchanges goes bankrupt. What does the customer do then? Okay, finally here, let's take a look at stablecoins. Friend or foe to the banking industry? The second Trump administration came out swinging in favor of crypto and stablecoins, but what could that mean for the banking industry? So, upon taking office, the president approved a crypto czar and signed an executive order supporting the responsible growth and use of digital assets, blockchain technology, and related technologies. In early February, lawmakers introduced draft legislation that would establish a regulatory framework for payment stablecoins. Among other things, the proposed bills outline procedures for institutions looking to issue stablecoins, and they set up reserve requirements for regulatory standards for stablecoin issuers. But what is stablecoin anyway, and what is its potential impact on the banking industry? Put simply, a stablecoin is a type of cryptocurrency that's pegged to another asset, perhaps gold or fiat currency such as the US dollar, and is therefore intended to maintain a more stable value over time. Contrast that with cryptocurrency more broadly, which can fluctuate wildly in value relative to the dollar. It's meant to mimic a digital dollar, and the way that they make sure that the value of it always stays a dollar is by having the Treasury Reserve dollar for dollar behind it. Now I'm going to skip down here. So stable coins generally don't offer any yield to purchasers, but they could, depending on the particular issuer. For the moment, it seems much of the industry leans toward the latter view here. Which is, whether a bank sees stablecoin as a potential opportunity or as a competitive threat may depend on the particular organization's strategy. So stablecoins could be an opportunity for some banks. Banks may want to approach stablecoins with a healthy dose of skepticism. Yes, I would highly recommend that. Bank directors should at least understand what stablecoins are and the technology they operate on. Some would argue there are other potential use cases for distributed ledger technology in the banking world. Rather than just chase the newest shiny object, bank directors might take the current moment to consider whether there's a place for stablecoins within their own current or future strategy. So here's the thing. I'm trying to think of the two stable coins at the moment. You have Terra, USD, and there was I'm trying to think, Tether and Terra. Which one failed? I think it was Tether. I think it was Terra. I think it was Terra. USD failed spectacularly in 2022, and that's what set off what was called the what was it, the dark winter, or the summer, the dark winter in crypto, whatever they called it. So Terra USD failing, that basically set up the dominoes, which caused all those other companies that we just looked at in the last article on Coinbase, Blockchain, Voyager, Celsius, they all went down after the failure of Terra, which ultimately culminated in the collapse of FTX in October, November timeframe of 2022. So we know that these stable coins are not super secure. They can fail, and they can fail spectacularly. And so that adds, kind of an element of danger to this. And I would, and so it remains to be seen. I mean, I think there is opportunity to do something out there with stablecoin, but there are dangers there. There are absolutely dangers there, and I think it just needs to be better understood. And again, there needs to be more regulation around some of these things. So, but that's it. But that's kind of it. What's going on right now in crypto? I mean, man, we covered a lot of ground here in this episode. I hope people kind of enjoyed a lot of these different stories. I'm going to continue to bring these different crypto related stories to you in these episodes, as well as reviewing other maybe documentaries and movie related crypto things that come out. So, but for that at the moment, I will wrap this up by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, check out some of the other content on the channel. Certainly check out some of the other episodes in the crypto series, as I think you might like them. But I will see everybody again real soon.